Guys, so we are back again, and in this session, we shall be trying to understand a very important concept in the field of financial modeling and valuation, and that is beta. Now, beta is very crucial, and the major problem with the beta is that not many people are trying to understand this thing systematically. इसको conceptually समझना बहुत important है. Because until and unless we do not calculate the most appropriate beta for the company, we won't be able to do the valuation for a company. We won't be able to arrive at the intrinsic valuation for the company. Right? So, as we all know from a previous session, intrinsic value refers to the most basic fair value of the company, the most basic fundamental value of the company based upon the future cash flows which might arrive in that particular corporate or that listed company or the unlisted company per se. तो कोई भी कंपनी हुई वहां पे बीटा को समझना बहुत इंपॉर्टेंट है. If I just talk about beta, I'll try to simplify beta, right? Because bookish formula सबको पता है, right? And for all of those who are the students of statistics and business maths, they know the formula for beta, right? It is basically in terms of from the stock market purview से अगर मैं बात करूं, is the covariance between the market returns and the stock returns divided by the variance of the market, right? So that is the basic formula to calculate beta. The covariance of the market returns and the stock returns divided by the variance of the market. But this formula is something that we need not use in the actual world because all the formulas, all the calculations, all the interpretations shall be done based upon Excel or data will be simply extracted from Capital IQ or the Bloomberg terminal. So real world में इस formula को use करके you will not be calculating the beta manually. So for us being the students of finance, for us being the students of financial modeling or valuations, CFA candidates, investment banking aspiring students, equity research guys, financial modeling experts, you need not calculate this number manually. Even Excel gives you a simple function to calculate beta and that we'll understand. But before we go towards in trying to understand, right, beta from a formula perspective or how to calculate beta, the first thing is we'll try to understand what exactly is beta and why is beta important. तो अगर मैं बीटा की बात करूं इन सिंपल लैंग्वेज, बीटा इज अ मेजर ऑफ सिस्टमैटिक रिस्क. बीटा इज अ मेजर ऑफ systematic risk. Systematic risk is also called as non-diversifiable risk. Systematic risk is also called as non-diversifiable risk. That is the risk which you cannot diversify. And what do I mean by the risk which we cannot diversify is ideally there are two types of risks in the market, right? On a broader way, in terms of market, I'm talking about, right? In terms of the stock markets. One risk is a systematic risk, and the other risk is the unsystematic risk. So if we talk about the unsystematic risk, it is also called as the diversifiable risk. Unsystematic risk is also called as diversifiable risk. It is that risk which you can diversify. And how we can diversify and how we can try to diversify that risk? We can diversify that risk by creating a portfolio. So for example, if I just had a particular set of stocks into my portfolio, if I run a portfolio and I just have stocks from the healthcare space, now it is not important or it's not mandatory कि healthcare space हमेशा ही अच्छा perform करेगा, right? There's a high possibility that the particular theme or that particular sector just performs for 2 months or 3 months or 1 year or 2 years per se. But it won't be giving you stellar outperformance at a stock basis or at a sectoral basis every year. हर साल हेल्थ नहीं चलेगा, हर साल आईटी नहीं चलेगा, हर साल कंज्यूमर डिस्क्रिशनरी शायद ना चले, हर साल एफएमसीजी शायद ना चले. एफएमसीजी टू बी ऑनेस्ट पिछले 10 साल से नहीं चला, right? So there can be many sectors which do not work lifelong. And that is why the major advisory to every person who is managing a portfolio or what the fund manager does is he tries to diversify. He doesn't put all the eggs into one basket. He has some exposure towards healthcare, some exposure towards IT, some towards banking, some towards healthcare, some towards consumer discretionary, some towards some kind of capital goods company or China plus one companies or chemical companies. Because if one sector or a particular theme is not performing well, it might happen that your portfolio might not give you returns. It might also happen that particular theme or sector might correct or crash systematically. again your portfolio will be into a negative territory at that particular point of time. A classic example is COVID-19 pandemic. So during the COVID-19 pandemic, if anyone had just invested into the hospitality companies, travel and tourism companies, hotel companies, right, his portfolio was into all negative territory. उसका portfolio बिल्कुल ही बर्बाद हो गया था. It was not even flat, it was all negative 50, 60% on 100% down. But if anybody had invested into the healthcare also at that particular point of time, specifically IT sector, be it the metal sector, his portfolio would have recovered all the losses that that particular investor might have incurred into the space of the travel and tourism or the space of hospitality per se. राइट, तो अगर उसको वहां पे 100% का लॉस हुआ भी था इन टर्म्स ऑफ द ट्रैवल एंड टूरिज्म इंडस्ट्री, तो उसका आईटी में रिकवर हो गया होता या हेल्थ केयर में रिकवर हो गया होता, तो स्टिल हिज पोर्टफोलियो वुड हैव बीन इनटू अ पॉजिटिव ट्रैजेक्टरी. तो दैट इज द अंडरलाइंग प्रेमाइस, राइट, कि जब भी हम अनसिस्टमैटिक रिस्क की बात कर रहे हैं, बिकॉज यहाँ पे वी आर एन टॉकिंग अबाउट बीटा, आई कम टू बीटा, but whenever we are trying to talk about the unsystematic risk or the risk which you can diversify that risk by creating a portfolio. So it is better to invest into different stocks, into different themes, into different sectors, instead of just having exposure to one sectoral bet. You can go for themes because theme comprises multiple sectors. So, for example, if I talk about capital goods or I talk about the Make in India. So, Make in India is not a sector. Make in India is a theme, right? So, it basically tries to indigenize the manufacturing and the production of goods and services in India and then exporting outside. So, multiple sectors can come and become a part of this theme. For example, your real estate companies can be a part of such theme. Capital goods company can be a part of such themes. Infrastructure companies can be a part of such themes. Defense can be a part of such themes. China plus one, like indigenous chemicals or semiconductors, can be a part of such themes, right? So if a theme comprises multiple sectors, again, that's an example of proper diversification. That is, a fund manager or a person is trying to reduce his unsystematic risk in the portfolio because he's trying to diversify into different fields and sectors. But the risk which cannot be diversified away, also called as the relevant risk or the market risk, right? इसको हम market risk भी कहते हैं. This is called as systematic risk, which you cannot diversify away even by creating a portfolio. There can be certain characteristics of a particular market or an economy. If something wrong happens, the whole sector or the whole economy will collapse or fall or simply correct, irrespective of the fact the fundamentals are strong or not, right? So, for example, if there is some black swan event, there is some geopolitical tension, there are some global debt crisis, or a particular economy is suffering some debt crisis, the whole economy will come down. Even the fundamentally strong stocks will come down. The whole stock market will crash. In that case, even if you diversify your bets into different stocks or themes, the portfolio is not saved, it's not hedged, right? The whole economy is crashing, the whole economy is coming down, and as a result, every sector, every stock in the whole entire market will come down. So that's a classic example of systematic risk or non-diversifiable risk, also called as market risk or relevant risk. And how do we try to connotate or how do we try to denote the systematic risk is via beta. Beta is a measure of systematic risk. It's a proxy for systematic risk. So whenever you have to calculate the market risk, it is your beta. You calculate the beta, you get your systematic risk, you get your non-diversifiable risk, you get your market risk or relevant risk per se. ठीक है, तो relevant risk की हमने बात करी. Other thing is, if you try to understand beta, beta can further, we can try to bifurcate beta into three types of betas, right? बहुत simple है, but the way market is trying to interpret this, or the newcomers are trying to interpret this, or many of the investors in the current market scenario are trying to interpret this as something which is not very appropriate, right? So ideally, in a practical scenario, you have three different types of beta. There can be one scenario where the beta of a particular stock or a portfolio. So beta you can calculate of your stock as well. For example, just for the purpose of education, HDFC Bank will have its own beta. Tata Motors will have its own beta. IT में, for example, Wipro or TCS will have its own beta. As a result, also further, if you try to talk about, if you try to create a portfolio will also have its own beta, right? And it's simple to calculate the portfolio's beta, right? It's the weight of the stock into the beta of the stock plus the weight of the stock 2 into the beta of the stock 2 plus the weight of the stock 3 into the beta of the stock 3 and so on. And simply you guys can calculate the beta of the portfolio, right? But वहां पर भी हम weighted average betas लेते हैं and different concepts होते हैं. But just trying to make things simpler for you. Either there can be a scenario when the beta is greater than 1, there can be a scenario where the beta is less than 1, and there can be a scenario where the beta is equal to 1. So whenever I say when the beta is more than 1, it's a classic example of aggressive beta. It's called as aggressive beta. And when the beta is less than 1, it's called as defensive beta, right? So aggressive beta is something which can be good for a kind of an risk-taking investor, aggressive investor. Whereas a defensive beta might be good for a conservative investor or some kind of a neutral investor. ठीक है. तो अगर एग्रेसिव बीटा है, मान लो आपका बीटा होगा 1.4, आपका बीटा होगा 1.3, 1.2, और अगर द बीटा इज डिफेंसिव इट विल बी लेस देन 1, 0.8, 0.9, 0.7, 0.6. एंड व्हेन विल द बीटा बी इक्वल टू 1? द बीटा ऑफ एन इंडेक्स इज ऑलवेज इक्वल टू 1. द बीटा of an index is always equal to 1, because we are trying to compare, or we are trying to ascertain our stock's risks or the portfolio's risk against the benchmark only. The benchmark can be Nifty 50, the benchmark can be Nifty 500. Because when we talked about the formula, that covariance of the market returns and the stock returns divided by the variance of the market, market was index ka return or the benchmark ka return. Correct? Index is the most appropriate term to use, right, for this Nifty 50 or the Nifty 500. Index का बीटा हमेशा will be 1. Correct? Also, अगर मैं बात करूं, if I come back to aggressive beta, so it basically states aggressive beta का मतलब क्या है? If my market is rising by some X percentage, right, that particular stock or portfolio will rise by some X into 1.4. So for example, in this case, my beta is 1.4. मैंने 1.4 का एग्जाम्पल ले लिया, या मान लो कि 1.5 का एग्जाम्पल ले लिया. एज्यूम करो कि मेरे पोर्टफोलियो का बीटा इज 1.5. द बीटा ऑफ माई पोर्टफोलियो इज 1.5. If my market is rising by some X percentage, my portfolio's value will rise by X into 1.5. Correct? So, for example, if I just try to make you understand, if Nifty 50, if I talk about the Nifty 50's past 10-year average return, Nifty 50's past 10-year average return, it has been approximately 12%. Nifty 500 has given some 13.5% to 14%. Why? Because Nifty 500 has some exposure towards the mid cap and the small cap spaces, right? The mid cap 150 is a part of the Nifty 500, and the small cap 250 as well is a part of Nifty 500. So as a result, you are taking some risky bets which can give you excess alpha or excess return over a Nifty 50 ka return. So for example, if I take Nifty 500, because for many of the portfolios which are multi-cap portfolios or have exposure to large cap, mid cap and small cap, their benchmark is Nifty 500. ठीक है? तो Nifty 500 उनका benchmark रहता है. तो if a past 10-year Nifty 500's average return assumingly has been 14%, right? So the major aim of an active fund manager is to beat the Nifty 500, because he wants to make more than the 14% return over a longer time horizon, at least more than 2 years, 3 years, 4 years, 5 years per se, right? Because we are doing investing. Beta should always be understood in terms of investing and not trading. Beta makes no significance if you are invested in the market for less than 2 years. Beta always is significant if you invest into market for more than 2 years. Then only you shall be able to reap the productive benefit of a high beta or a low beta per se. I'll make you understand that. So for example, the average 10-year return of Nifty 500 at the index level is 14%. So if I'm investing into a portfolio having a beta of 1.5, ठीक है, 1.5 का बीटा है, तो my average 10 ईयर का रिटर्न, तो 10 साल में मेरा कितना पैसा बना? It would be 14 into 1.5. So I made 21% return. I can convert this number to percentage, but just for the sake of simplicity of understanding, 14% was a benchmark's return, Nifty 500, but I made 21% because the beta of my portfolio was 1.5, more than 1, aggressive. High growth companies, high growth portfolios generally have a beta of more than 1. If you are exposure to mid cap and small cap, much more in the portfolio, the beta will be more than 1 always, because major growth in the market comes from the mid cap and the small cap spaces. Now, it is the positive point of high beta, but I would say the negative point is also true, right? If the market falls by 10%, right, your portfolio will fall by more than 10%. अगर 10% से market गिर गई, then my portfolio will fall by 15%. Again, that is a drawback which many people tend to see in the market. ठीक है, वो drawback है. High beta is always good in a rising market, we can see as of this particular point of time. ठीक है, I'll come back to this point and try to provide more clarity. Secondly, if I talk about a low beta, that is a defensive beta, a beta less than 1. Simple logic, if my market has risen by 14%, if my market has risen by 14% and my beta is zero point 0.8, assume my beta is zero point 0.8 of the portfolio. I go for a value portfolio and not a growth portfolio. ठीक है, low PE stocks, a cheap portfolio in terms of valuation. So अगर 14% market का return है and I go for a zero point 0.8 beta portfolio, it gives me a 0.8, 11.2%. I'm not even able to beat the benchmark over a long term. But if my portfolio falls by 10%, I fall less. If my portfolio falls by 10%, then I fall less. So we can say in case of an aggressive beta, it is good when the market rises, and a defensive beta is good when the market falls, right? So one way to try to understand this, have a combination of both the betas. Have a portfolio, have a portfolio, always add growth with value if you are comfortable with. But if you're a superly aggressive investor, they need to understand that if someone had to choose between a high beta, between an aggressive beta and a defensive beta over a long term in the equity market, and he wants to make the exit return or alpha over the benchmark, then choosing an aggressive beta is always appropriate. Because over the long term, the market always rises. Over 1 year, the market might fall. Over a 2 year, the market might fall or the market might be flat. But over a long term period, at least 2 years, you see a 2 year return, you see a 3 year return, you see a 4 year return, 5 year, 6 year, 7 year, 8 year, 9 year, 10 year. The market always rises over a long term. There might be some fluctuations in between. There will be volatility in between. There might be some ups and downs in the market, which might make the returns or the structure of the market quite hazy or difficult to understand or to interpret. Many people might withdraw their money from the market also at that particular point of time. But we need to understand that over the long term, the market always rises. And hence, if you are an aggressive investor, you can take that risk, understand the volatility, manage the volatility, right? Or tolerate the riskiness in your portfolio or the volatility in your portfolios. You can always go for a high beta because over the long term, you will always beat market by a sheer margin. But if you aren't comfortable, always combine aggressive beta strategies with a defensive beta strategies. Have two portfolios, growth and value. Okay. So that is something we try to understand about beta. If I just show you how do we calculate it. So I've taken one hypothetical example. I've taken the returns of Nifty index. I've taken the returns of a listed company limited. It's a hypothetical company. Take it. I've taken the returns based upon the closing prices of the Nifty index. I've taken the returns based upon the closing prices of the listed company. अब इसके basis पे I want to calculate my beta. ठीक है, so simply what I can do, I can simply use what? I can simply use a slope function in Excel. I can simply use a slope function in Excel. Slope function helps you to calculate beta. I'll just zoom in for you as well. यहाँ पे if you see in this cell M, right, M5, I've simply used the slope function, right? So it says my first parameter knowns y and known x. ठीक है, known y. So here I've selected my stock returns because my stock returns are the dependent variables. Y is taken into account as a dependent variable, right? So I've taken the stock returns here, and in the y, in the x's, that is your independent variable. So x is taken as independent variable by Excel. So I've taken in here as the returns of the index. ठीक है, ये 10 साल का टाइम पीरियड था. आई हैव टेकन द नंबर्स फ्रॉम द बीएससी. ठीक है, बीएससी में जाके वी कैन एक्सट्रैक्ट द डेटा एंड दैट वी कैन सी दैट हाउ वी कैन डू राइट इन माई प्रीवियस वीडियोज. एक बार वो चेक कर लेना. तो वह बीटा कम्स आउट टू बी 0.60. 5 साल का बीटा निकाला है स्टॉक का अगेंस्ट द मार्केट. बीटा कैन ऑलवेज बी फाउंड अगेंस्ट द मार्केट ऑफ दैट पर्टिकुलर कंपनी. सो 0.60 is a 5-year beta. Now, what is the levered beta? I'll make you understand. This is a 0.60 beta. It shows the portfolio is a defensive portfolio, or the stock is defensive per se, right? Not the portfolio, but this particular stock of the listed company is a defensive stock. Okay. Now, there are two more concepts to make you understand. One thing is your levered beta, and the second thing is the unlevered beta. If I talk about the levered beta, if I talk about the levered beta, a levered beta simply means the beta which has the impact of debt. If the beta has the impact of the company's debt into it, that's a levered beta. But if you subtract or ignore the impact of debt, it's an unlevered beta. सिंपल लॉजिक, अगर कंपनी के बीटा में डेट का इम्पैक्ट है, अगर बीटा हमने कैलकुलेट करा एंड उस बीटा में कंपनी के डेट का इम्पैक्ट है, सो दैट्स अ लीवर्ड बीटा. बट इफ अ बीटा इज नॉट हैविंग अ कंपनीज डेट्स इम्पैक्ट, इट्स एन अनलीवर्ड बीटा. सो यहाँ पे द फॉर्मूला इज देयर. फॉर द लीवर्ड बीटा द फॉर्मूला सेज unlevered beta into 1 plus 1 minus tax rate into debt by equity. So firstly we'll solve this मतलब कि 1 into debt by equity into 1 minus tax rate. We can simply add a 1 to it and multiply it by the unlevered beta. And if you want to calculate the unlevered beta from levered beta, the formula is just a reversal. It's a levered beta divided by 1 plus 1 minus tax rate into debt by equity. Okay, but this formula is something that you will learn once you see this video. Once you have this file, you try to understand the formula. अब the beta that we calculate from the data we get on a BSE की website, right? The stock returns we had and the index returns we had. By default, it is always a levered beta. The beta that comes out by using the slope function, it is always a levered beta because the debt impact has been taken into account already. ठीक है, so whenever you are using the slope function and using the specific company's returns and index return, you need not worry about that whether I'm calculating the unlevered beta or the levered beta. It is always a levered beta. We talked about a CAPM model in the previous session, the capital asset pricing model, to calculate the cost of equity, the risk-free rate plus beta into the risk premium. That beta is also your levered beta, a very popular interview question. In CAPM model, the beta that you used is levered or unlevered. It's a levered beta always. Okay. Now, if I want to unlever this beta, I can simply use the formula. I can simply use the formula to unlever my beta. So that's my levered beta divided by 1 plus 1 minus tax rate into debt by equity. ठीक है. Now ignore what has been done ideally here. Formula वाइज समझो, because if you are with me via my previous session, मैंने previous टैब में वैक की कैलकुलेशन करी हुई है पूरी. राइट, द वैक्स कैलकुलेशन इज देयर. वैक इज अ वेटेड एवरेज कॉस्ट ऑफ कैपिटल. अगर नहीं पता देन प्रीवियस सेशन देख लो. ठीक है. तो यहाँ पर मैंने इसी फॉर्मूला के बेसिस पे, मैंने कुछ डिफरेंट नहीं करा, इसी फॉर्मूला के बेसिस पे आई हैव कैलकुलेटेड माई अनलीवर्ड बीटा. And what is my reason to calculate the unlevered beta? Why will I calculate the unlevered beta? Practically, there is no use of this term unlevered beta. Every time in 100% of the cases, the market experts wants to know levered beta. But in the field of financial modeling and valuation, you have to unlever that beta. Why? Company which I'm trying to value, or a company for which I'm trying to prepare an equity research report, has some debt into it. The management might target to increase the debt or reduce the debt. And how do you get to know this? By the conference calls or management calls or discussions. Con call reports आती हैं. तो वहां पर the management is saying they're planning to reduce the debt up to this extent for next 5 years, or they're planning to increase the debt due to some further expansionary projects, due to some further M&As, right? Or some kind of the product expansion is there, some kind of an overseas diversification is there, expansion is there, some kind of capex is there, and as a result इसकी वजह से वो अपनी डेट को बढ़ा रहे हैं. तो वो सब गाइडेंस कंपनी के कॉन्फ्रेंस कॉल में मिल जाती है. उसी के बेसिस पे हम जब भी कॉस्ट ऑफ इक्विटी निकाल रहे हैं, जब भी कॉस्ट ऑफ इक्विटी निकाल रहे हैं, वी नीड टू हैव द इम्पैक्ट ऑफ द न्यू बीटा इनटू इट. We need to have the impact of the new beta into it. We cannot use the old beta because financial modeling valuation is all about forecasting. So you have to use the forecasted beta. You cannot use the old beta. तो यहाँ पे जो 0.60 का बीटा है, it has taken into account the current debt to equity ratio of this hypothetical company. तो ये जो hypothetical company का मैंने यहाँ पे एग्जांपल दिया है, इसका current debt to equity ratio is 10%. एंड उसी के बेसिस पे दिस 0.60 हैज कम इन टू प्लेस. But the management says, hypothetically, we are assuming just to make you understand that the debt will be reduced by 6%. 6% कंपनी का डेट कम कर देंगे अगले 5 साल में, एंड कंपनी का डेट वुड कम डाउन टू 4%. So we cannot take this 10%, the 0.60 makes no sense for us then. So we have to remove the impact of this 10% and add the impact of this 4%, right? We need to remove the impact of this 10%, which makes no sense as of now, and add the impact of this 4%. So if we relever this beta, we use a simple formula. ये वाला. So our unlevered beta is this 0.73 into 1 plus 1 minus tax rate divided by debt to equity. जो अपना 4% है इस केस में. जो अपना 4% है इस केस में. Simply, I used that and got the relevered beta. And this beta is something that shall be used in terms of calculating the cost of equity. Though, ज़्यादा difference नहीं है, 0.60, 0.57, right? And even in the WAC also, if you see, 0.57 has been used. And this has been taken from this tab. Taken from beta tab. तो यही चीज है जो हमें आइडियली समझनी है in terms of beta, right? And that is something which people are trying to understand practically, राइट? कि बीटा को लीवर कब करना है, कब अनलीवर करना है, एंड मोस्ट इंपॉर्टेंटली हाउ टू इंटरप्रेट द एग्रेसिव बीटास और डिफेंसिव बीटास. नॉट बोथ ऑफ देम आर बैड, राइट? फॉर विच काइंड ऑफ इन्वेस्टर aggressive works, for which kind of investor a defensive works, or when to have both the strategies, growth and value, is something that we need to understand. That is all for today. I'll meet you in the subsequent session. then बात करेंगे कुछ और फाइनेंशियल मॉडलिंग एंड वैल्यूएशन टूल्स के बारे में. थैंक यू.